with all of you. Welcome, welcome. How's everyone doing? Good? Todo mundo bien? Well, we're happy to have you with us today in this webinar. I want to start by thanking our presenting sponsor. Oh gosh, Manny de Cañal, Ocean Bank, always a presenting sponsor here with us. We really are very appreciative. Hey, aplaudir. For you, also FPL, gold sponsor, Ponemos as well. And Univision, I know that Jason's around here somewhere. He was logging on, so thank you so very much. Claudia, for all of the support that you give us, we are really, really appreciative. Just one quick thing, I know we're in a hurry, upcoming webinars. We have the Ford F-150 built tough for Latino business. And I'm gonna be moderating. Imagine, I'm gonna take a course on those trucks. So that's coming up on the 26th. We have also the positive impact of sports to our economy. I know that Roland Sanchez Medina, our chairman of the board, is working diligently on that one. And then we also have the New World of Telemedicine, September 15th. And then we'll have sustainability and also nonprofit webinars. And I want to just recognize our chairman of the board, Roland Sanchez Medina, who's here with us. Roland. And you'll be moderating many of the other webinars that are coming up, except the one for the truck that I'll be. I don't know why they asked me to moderate something that has to do with trucks, but anyway, I'll try to do that very, very well. Now turning this over to the one and only, Mr. Felipe Basulto. Our immediate past chair.
Yeah, Roland, anything you wanted to share, sir? I just
No, I have Felipe. I congratulate you. This is an excellent panel. I mean, I happen to know Al and Manny and George. I've run into before at meetings, but I mean, I said it's obviously with you leading it, it's an excellent panel. So we're lucky to have people like that. Thank you.
Well, no, thank you for that. And by the way, thank you for bringing that up. Just so for our participants, we're going to shift to two different sets of panels.
Right.
Do a series of questions with Al Molini, who's on the panel right now, and I want them to go ahead and introduce themselves. Although Jorge, a double FIU graduate, undergrad and master's in the MBA.
Yes, sir.
So congrats, that's nice. I know a lot of our FIU fans here are appreciative of that. So we'll go ahead and do that very shortly. I'm just going to go over a couple of housekeeping items, but I'd like for you both to go ahead and introduce yourselves, and then I'll go through a series of questions. For all of our participants who are signing on, we're going to have the series of two webinars. To be clear, by the way, as soon as we can flip over, I'm going to have Manny de Cañal come on and welcome and have also some sponsor remarks specifically from Ocean Bank, who's a sponsor and such a great member of the South Florida Hispanic Chamber. Thank you for all that they do, and not only for our chamber, for our community. Ocean Bank truly is a testament to what it is to be a community citizen. So our participants, please utilize the Q&A box that's located on the bottom of your webinar there in order for us to view any questions that you might have for our panelists. That is the only way that we'll be able to field some questions. We'll go through a series of them that we've already prepared, but in addition to that, please feel free to add any on there. And then I will be flagging the rest of our participants because our webinar, like I said, is going to split into two different parts. We're just going to go through a series of questions first and foremost with Al and Jorge. So gentlemen, why don't you go ahead and introduce yourself? Al, why don't you tell us a little bit about who you are, that you've been working in investments forever. Tell us all the good stuff.
Absolutely. 35 years in the business, senior portfolio manager at Morgan Stanley. I'm also an alternative investments director there. I do a lot of business in alternative investments. Some more background, I'm a certified financial planner. Took the classes at Barry University, passed a stringent test back in '96. And I'm also a certified portfolio manager through the Financial School of Engineering at Columbia University. So that's some brief background on myself. The not so brief is the 35 years.
No, but that's a great career. And for those who don't know, those designations that Al just shared are impressive. So CFPs aren't as common as just a Series 7 licensed broker, just to be clear. But Jorge, what about you, sir? Tell us a little bit about yourself.
Yep. First and foremost, thank you for having us today. As you mentioned, I am a graduate of FIU for both my undergrad and my master's degree. I've been in the financial industry for about 15 years. With Morgan Stanley, I've been about 5 or 6 years now.
Excellent, excellent. Well, welcome. And again, thank you both of us for joining and giving us an update on the economics of what's going on. So I'm going to position the first question. And Al, I know we spoke about this, and it's funny. We had the conversation. Like, give me an update on the market. Give me an update on the economics. Let's do this. Why don't we do it as a dual update? Because as clearly stated, the market and economics go very much in hand. So the first question is, can you give us an update on, first of all, what's been happening and what's happening in the market and economics during this COVID quarantine shutdown craziness? So Jorge, over to you.
Sure. So, I don't have to tell you how crazy and tumultuous 2020 has been in every aspect of our life. We've had big moves, ups and downs, and the market is no different to that. I'm sure most of you have looked at your statements for your investment accounts or your 401ks at one point in this year and have been shocked at the numbers that you've seen. Just as a macro update on that, as of today, where we stand with the three major indices that we follow, the Dow Jones average is down about 2.4% for the year. The S&P is actually up about 4.6% for the year, and the NASDAQ is up roughly 24% for the year. Regarding the economy as a whole, as I mentioned, and obviously you all know what's going on. This whole situation has caused our economy to come to a complete halt, which took a toll on the economy as a whole. While some sectors of the economy are actually doing quite well, which we'll get into later, others have been hit quite hard. So the main economic factor that we look at to see how our economy is performing as a whole is the GDP. The GDP comes out on a quarterly basis, and the results are as follows. The first quarter GDP was actually negative 5%, and the second quarter GDP was negative, big number, negative 32.9%. Al, would you like to add something to that?
Yeah, just briefly, I think one of the themes of this call is speed. The speed that things happen today, which has really gone to the next level in the last 4 to 5 months. But 35 years ago, when I got involved in the business, things were a little bit different, to put it mildly. They were slightly different. I remember doing research and going to the library, and it was you didn't have the access, so things didn't happen as quickly as they do today. But just to cover the market real quick, things were humming along, and then February 10th, things start falling out of bed because the market started smelling this COVID crisis. And February 10th, the S&P hit a high. By the way, I just want to make a note. We are literally hitting a high as we speak right now. The S&P is hitting an all-time high today. Okay, so we hit an all-time high February 10th. The market really falls out of bed, and by the 23rd of March, we're down 35% in a record decline, especially the first 3 weeks of March. Then investors started smelling opportunity. We started buying, and now the market is up 55% since the lows. Again, another record upswing, a lightning recovery on the upside. By the way, there's speed of information, but there's also speed of money. Money moves quicker now than it ever did before, especially now. For example, I had thought very optimistically that we would be at these levels by the end of the year. So I was predicting by the end of the year, when things really look bad, and a recovery like that doesn't seem realistic. And yet, here we are in August, we've already had that recovery in August, not in December. So quickness in the market. I just want to say also that the government has really stepped up with its stimulus package, which has really helped. And in the past, where they really looked to bail out the banks and General Motors of the world, et cetera, now they really stepped up to help the small businessman and the person on the street. And this has also added fuel to the fire.
Al, I think I want to circle back with a thought and a question around how can the market be doing so well with everything that we have going on right now? I mean, I think it's a question on a lot of people's minds. I mean, things are bad. They're very difficult out there, and we view as more economically challenged. But to your point, the market is doing very, very well.
This is the most asked question from my own clients and from investors, because we're having a decent year. And it's actually amazing to a lot of people. How can it be? How can we be making money? It's crazy. I mean, you turn into the news and it's crazy. Everything is crazy. Yet here the market is making an all-time high today. People are making money. There's a few factors. First of all, interest rates are at zero. Okay, so you know, the investor on the street, if you want to put your money to work, you know, your options are make close to zero in deposits or in bonds,
Yeah.
or venture out into the stock market. I mean, you have companies like, one of the companies that I can think of with a high dividend is ExxonMobil. Great company, pays an 8.2% dividend. I don't want to get into touting companies, by the way, but I'll just use that as an example loosely. But you have companies that pay real dividends much better than deposits or bonds. Other things, the Fed has proved and the government has proved that they're a backstop for everything. They're willing to put the money on the table. And that gives a lot of confidence to investors, right? And that's a big reason for the market actually reversing and starting its uptrend. Another factor, low oil prices help. Economic numbers are coming back. We'll get into a few other economic numbers and unemployment numbers, but they're coming back better than expected. Okay. Here's something interesting. First time ever, 80% of the companies have reported earnings, and 64% of those have better earnings. In other words, they were earnings surprises on the positive side. That's never happened before. So you have, there are good things. There are good things that are going on. It's not everything that you hear. And then I'll circle back to this later on. But you know, it just kind of is what it is. The American stock market is one of the best wealth generators in the history of the world, and people look to the stock market. So when stocks are cheaper, you know, when you can buy, you know, Apple and Amazon at discount prices, now they're not anymore, but at that point you could, then you know, that again adds fuel to the fire.
I'm looking forward to my four-way split on my Apple stock August 31st. So, but sir, I do want to come back to a question regarding the markets overall. Let's talk about what sectors, because not everybody, 64% that's impressive, right? But what sectors are performing extremely well? What sectors are suffering in the market and economically?
George, you want to handle that?
Definitely. So I'm sure you can all guess what the best performing sectors of 2020 has been, and it's been the technology sector. You know, we've deemed the technology sector pretty much as a whole as the quote unquote stay at home stocks. You know, tech stocks have been you know, done very well this year, seeing as how we've had to rely on them while staying at home, and like most of us here, I can tell, working from home. You know, companies like Zoom, like Amazon, like Apple, like, you know, pretty much any company you can think of, Facebook. And as we mentioned before, the tech index, which is the NASDAQ, is up 22% for the year. And that's, you know, that's definitely showing that.
Good. No, excellent. Yeah, thank you for that.
Let me add on to that, if I may, Felipe. A lot of people don't know this, but 43% of the earnings of the S&P 500 are international. I just wanted to throw that in. We talk about sectors, and we generally talk about the American market, but 43% of the S&P is international. So by going into some of these big name companies, you already have international exposure. Getting into individual sectors, you know, there truly is a dichotomy today between the digital and the physical market. And technology is the digital market. Probably secondary to technology, by the way, would be healthcare. That would be the other sector that's kind of hot right now. But I mean, we're on a Zoom call, and I just thought of this. We're on a Zoom call. I didn't use Zoom 4 months ago. Maybe many of you didn't either.
I didn't even know what Zoom was 4 months ago.
And
WebEx, same thing.
Right. Yeah. Exactly.
So to give you an idea, Zoom had 9 million users 4 months ago. Today it has 300 million users. So that's a clear example of a company that is making a lot of money.
And
And there are other companies that are similar to that in the technology area.
Since we're all quarantined, Netflix has got to be a hot button.
Well, let me mention this stat. Now that you say that, very important. So, 75% of the CFOs expect that we will permanently, that the majority of their workers will permanently work from home. They're going to work remotely forever. Yeah. 75% of the CFOs. So that's a big number. I mean, you know, even the company I work with, I mean, we were looking to open, and then finally we said, you know what? Why take the risk? And things are going so well. We can all do this from home. Let's delay this until sometime in 21. So.
Yeah. No, makes sense. Heard a lot of similar things. So let's talk about some key economic factors, and then you know we'll transition at the end because I want you guys to share the importance of financial planning and what you guys do, and please, if you haven't had a chance, you know, Lily can share contact information for Jorge and Al regarding Morgan Stanley and accessing them for advice and for services. But with that, especially with the planning, I'm a banker and I see it all the time with commercial business owners that don't do financial planning or individuals, and it's really important. But what I want to talk about, let's talk about economic conditions and how they affect different things, because I still go back to the same question you get asked all the time, Al. Wait a second, we're doing so well. And it's true, like there are sectors and things that are just doing exceptionally well, exceeding expectations as you shared. But let's talk about unemployment. What's going on with unemployment and how is that affecting the economics of this?
I'll give you a quick update there. So as you can imagine, and I'm sure you've seen, the jobs market has been decimated this year. It's kind of obvious that when companies are forced to close for weeks and months at a time, they're going to have to lay off employees at some point. Before all this happened, our unemployment was actually the best it's been in a very, very long time. And it was hovering right around 3.5%. Due to all the closings forced by COVID-19, the unemployment rate skyrocketed to 14.7% in April. Thankfully, since then, that number has been slowly coming down, and it currently stands at around 10.2%.
Let me just add on that, first of all, if I can get a little bit basic, unemployment figures are based on people that are actually in the workforce, right, which is about 160 million people. So it's all based off of that number. Okay, so here's the story. Going in May, they were expecting a loss of 8 million jobs. Now, if we would have gotten a loss of 8 million jobs in May, we would have been at Great Depression levels. Really serious stuff.
Right.
What happens? We get a gain of 2.2 million jobs. We added 2.2 million jobs. By the way, that's a 10 million job swing in the prediction, which is unbelievable. Like, that's never been seen even close to that before. So the unemployment picture, as Georgia said, is at 10.2% right now and slowly improving. Not going to be back to where it was quickly, but investors like a positive trend.
Yeah.
Investors like a positive trend, and the trend right now is positive, and that's a good thing.
I think that the interesting part about this too is, so we were coming off, before we went into this, the lowest unemployment I think ever in history before we went into this crazy quarantine virus. To then go into situations, and to your point, the stimulus, it's fair to say, assisted in mitigating a lot of that unemployment.
Yes. And yes.
Job growth in certain industries, substantial. I mean, go like to Amazon or Instacart. I think a lot of us know where a lot of people are working as well. There are opportunities and people are seeking them out there.
Yeah, I mean, the whole PPP program was a home run for the small business owner. It just was. I mean, how many businesses would not even exist right now if it wasn't for PPP money. I don't know. Many that we know right here in Miami.
Yeah, no, I can tell you because we did a lot of PPPs. I'm sure Manny Decañad, when he comes back on, Ocean Bank was also extremely active as well, because these were critical support mechanisms for our businesses, and they've worked. And just want to make sure we get back to work. And I know Lily, just so you all know, please look out. Lily has a petition out there specifically for our restaurant folks, which as a sector, they're not doing so well. They're having a really tough time. So let's support, let's do this for Miami. Let's support them. Very important. We want to get them back open. I think that we can learn to work through that the best way possible within county regulations. So unemployment is one of the key factors. But will we consider ourselves in a recession right now or no?
So the recession word is thrown around a lot. But let me just give you a basic definition of it in case anyone on here is not aware. A recession is a period in which we have 2 quarters of negative GDP, right? So as we mentioned before, Q1 GDP was negative 5% and Q2 GDP was negative. Go on, I'm sorry.
Sorry, I just want to jump in real quick because a question did come through on your GDP numbers, and I know the answer, but they want to know if it's a state or federal numbers.
It's the federal number. Yes, definitely. So no, it's okay. So the Q2 GDP was negative 32.9%. So considering those numbers, we technically are in a recession, and I think Al will share some, what we feel about going forward.
Well, I was about to say, then can you please talk to me about the concerns about inflation? So there's a lot. What is the projections out there, Mr. Malini?
Well, I just want to say on a recession, George was exactly correct, but another definition of a recession, this is an industry kind of joke. If your neighbor's out of work, you're in a recession. If you're out of work, you're in a depression. So that's a little industry joke, but the reality is inflation is a big theme right now. It's a big theme, and I've heard everything from the ridiculous, the sublime to the ridiculous. There's going to be some inflation. There's going to be a lot of inflation. There's going to be 70s style hyperinflation. I mean, I've heard everything. Okay, but I think the general theme is there's going to be inflation. Okay, and that's why you're seeing, for example, a run in precious metals. You're seeing a run in oil. Okay, and just in general, one of the themes that we're changing in our investments right now is adding some type of inflation hedge to our portfolios, because we are expecting that, and we're expecting that somewhere going into 2021. So that is correct. There is going to be some type of inflation, but I've heard all types of numbers, Felipe. So I don't want to nail that down, but I think the general theme is yes, there's going to be inflation. There's going to be higher prices.
Yeah. We'll see how the Fed reacts to that. They can't lower rates anymore, so it'll be interesting. There's a lot of another economic forecasting condition. Let's go down this path. We have an election. We have a presidential election going on. We also have a lot of other seats that are coming up. Can you please share, do you think the election is going to have any kind of effect on our market or the economics of it? George, why don't you take the first stab at that one?
Sure. So obviously a presidential election is a major event that happens within our country. When we look at how the market reacts to an election year or just, Democratic versus Republican, the results are pretty interesting. So I've looked back through data from 1926 through 2019, right? So we've had a Republican president for 46 years during that time and a Democratic president for 48 years during that time. While the Republican was in office, the S&P has averaged around 9% per year. And while the Democratic president is in office, the S&P has returned about 14% during that time period. The election year, on average, performs pretty well. We've had an average of about 7% on the S&P during the election year, and the market typically tends to rally after election day, only because we kind of know what's going to happen, and the sectors do with it as they will.
Yeah, I would like to add that, it's interesting because George and I won't mention who's who, but we belong to two different political parties. But one thing that we absolutely agree on is that we don't confuse politics with money. We're agnostic as far as our money. So, no matter who wins the presidency or what happens, this economy is going to keep chugging forward. Okay. We feel the market is going to be here or higher at the end of the year, regardless. The big changes might happen long term. Let's say if there's a Biden presidency versus a Trump presidency, but that's not going to happen the next day. Okay. Now, you have to, we can debate. I know how I feel. We can debate whether higher taxes and more regulations are helpful to the stock market and the business, or are hurtful. Okay, I have my opinion, but again, the economy is strong. It's going to keep moving forward. As George pointed out, we made a lot of money in the Trump years. Guess what? We made a lot of money during the Obama years. Okay, so we're going to keep moving forward here. That's my opinion.
We'll see what the long-term effects are there. Gentlemen, we're coming to our time there. Any last things that you wanted to add? And as for our other panelists that are going to be joining up, we're gonna flip over shortly. You guys can start engaging your cameras back on so we can see you. But Al and George, anything else that you guys want to add for our audience?
Want to go first, George?
Oh, sure. Yeah. Just a quick thing. No matter what's going on with the market, we believe that financial planning is the paramount, the most important thing that you could do. So if you don't know what a financial plan is, just quick, input all your assets, all your liabilities, and more importantly than those two things, is your financial goals, whatever those goals may be. These things can be retirement, paying for your kids' college, vacation homes, whatever it is. And having a plan in place will mitigate, years like this year or years like any year that happens. As long as we have a good plan in place, we'll be able to mitigate any of the outside things that are happening.
Financial planning, number one. You must have a financial roadmap for your life. You must have something set up for end of life. Unbelievable. More than 50% of investors of worth that I ask, do you have a will or a trust, have no will or a trust in place? Incredible. But that is what it is. Many people on this call may not have a will or a trust. Okay. So you have to have your financial affairs in order. You have to have a roadmap. You have to have a will or a trust. As far as what's happening from here to the end of the year in the market, we see continued recovery. There is an inflation theme. I think that people in general are having a greater understanding of COVID. Please don't be confused by the news. They try to confuse you. When you look at the statistics, and we have those, you can clearly see what's going on in that area. Okay. We continue to see better employment numbers, and just a neutral to positive trend from here to the end of the year.
Perfect. I have a trust, and I have no money, and I have a will, and I have no money. I have all those. Ali, Jorge, thank you both very much. Appreciate having you guys say a lot of valuable information. We're going to flip our seminar over to some other economic factors as well, and then piggyback off of investments. But first, I'd like for Manny, who is our sponsor for today from Ocean Bank, to please share some words. Manny, again, it is great to see you. I know I welcomed you when you first got here, but great to see you, sir. It's been too long, even though it's virtual. Hope you are doing well. Hope your family's doing well. But talk to us a little about Ocean Bank, sir.
Thank you, Felipe, and thank you, Lily, for having Ocean and giving us the ability to sponsor this event. Another great seminar by the South Florida Hispanic Chamber of Commerce. As Most of you know, if not all of you, we have a very close relationship with the Chamber. We've had one for many years. And obviously, very importantly, with our former head of lending and retail banking, who unfortunately passed away, Ralph Gonzalez Jacobo, who had a very close relationship with Liddy and the Chamber for many, many years. Ocean Bank, again, very happy to be part of this event. We're a $4.5 billion community bank based out of South Florida, 23 branches, and a very strong involvement with international from our inception, our founding families, our Portuguese, Venezuelan. We have, again, a very strong foundation in international business, and a big part of the bank is inbound international clients from Argentina all the way to Mexico and the Caribbean. And then in South Florida, we are a very strong community bank with a lot of deep roots here. A lot of big business owners got their start with a handshake loan from Ocean Bank 25, 30 years ago. We've been in this community almost 40 years now, and again, continue to invest in the community. We have bankers throughout branches all over South Florida, and we will continue to support this community in every way we can. So thank you for the opportunity to participate in today's seminar.
No problem, Manny. And Ocean Bank has definitely set themselves apart, long-term and long-running and solid, stable, again, a pillar of this community. So I salute you guys. As a banker, I tip my hat and salute you guys very much. Al and Jorge, we're going to ask you guys, you can stop your videos if you like. I'm waiting for a couple others to join us real quick. I don't know. I know that they had issues where I think that they disconnected their cameras altogether. So need to do that. And by the way, can we all just take a really quick peek at Roland Sanchez Medina's baby picture that he has? Hysterical. That's just outstanding. And Jorge has a lovely wife. But yeah, I'm just waiting on a couple of them to come in. So I've got lots of bios here. Cynthia, Cynthia, do you have the ability to share your video?
I'm trying to. I'm not quite sure why it's not letting me.
Do you know how to use it, or do you want me to walk you through that?
No, I know how to use it, and it's new to me, but not that new. It's just not letting me join the video.
Okay, it might have said something, choose a video. Do you go into your video settings?
Let's see.
You should be able to reflect yourself. And Juan del Busto, Lily, I need you to find him. I think he's logged off, and Samira both. So
Lily, I'm gonna log off and log back on and see if it'll let me.
Yes, I can't find Juan del Busto.
Problem. That's okay, because we'll go ahead and we'll spend some time with Manny, and I'll let Manny has a few things to go over regardless. So it'll be fantastic to be able to spend some time with my good buddy Manny here before we get the rest of the team back on. So that's outstanding. Manny, then Manny. So we've heard a lot about the current conditions and the impact of COVID and it's had on economic trends, on different forecasts. But I know you work with Ocean Financial and with their investments and retirement plans, correct, sir? That's a fair assessment. Can you tell us a little bit about what advice you have for our people who are in the market or investing right now?
Sure, Felipe. So again, I think Al and George articulated the dynamics of the market very well. I think what's interesting is a lot of our clients are wondering what they should do with their investments, especially given with the uncertainty with COVID. Is this going to last? Is this going to persist into next year? So clients are very confused, quite frankly. And the consensus, I just saw an article yesterday that Goldman Sachs is estimating that later this year, there's a high probability that there'll be another strong correction in the market. But by the same token, they're also estimating that 2021 should be a very, very good year for the equity markets, again, assuming that a vaccine is developed, hopefully by then. And there'll be a lot of economic activity, a lot of this cash that's right now built up in all of our banks, including TD, including Ocean. A lot of that will now go into the economy, and that should give a boost to economic activity. So I think what's most important is if clients have a plan and had a plan before COVID, I don't think that COVID should make a big difference in that plan. So I think if a client was looking to retire, say 10 or 15 years from now, and they had an asset allocation strategy that was developed based on a long-term strategy based on their needs for retirement, whether they had kids that they needed to put through college, did they have kids or grandkids that they needed to help or help them buy a home or whatever. I don't think COVID should make a major difference from a strategic perspective in their investment strategy. I think there's going to be ups and downs. As Al said, we had a big correction that ended in March, and then from March to July, we've had a crazy recovery, over 55%. So that tells you that if you panic sell when markets are going down, that's exactly the wrong thing to do and the wrong time to do it. You have to stick with your investment strategy, stay the course, and if your advisor, whether it's Al, whether it's us in Ocean Financial, if we understand your time horizon, your objectives, your risk tolerance, what you need to do, your cash flow, that's what's most important.
Manny, so you're telling me I'm still going to be able to retire, right? I just want to be sure, because that's my plan. That's my worry. I already kicked my son out of the house, getting rid of the mortgage. I'm not accumulating debt, although I have been buying a lot of unnecessary items as a form of retail therapy during this quarantine time. Spending money on things I don't need with money I don't have.
As long as you didn't panic sell in March, you're good to go, Felipe.
Not going to panic sell. I have an air fryer that does 9 different things. I only know how to use one part of it. I just thought you'd enjoy that. Manny, I think that there's other components which are really important, and I elaborate more on advice and planning. And I think it's important because I don't want to get back to the statistics, but being what you all do at Ocean Financial as part of the Ocean Bank, although for everybody that's a separate investment arm, correct, sir?
Yeah.
You're an employee, but what I want to make sure is that you share with them the importance of the advice. Because, hearing 2 gentlemen speak about it before, listening to you, if you came to me, I would give you to specific people who are designated to give advice. Please share the importance of that and reinforce the planning piece, because I think it was something important they shared.
Absolutely. I think what's most important is that you find the right advisor that does more listening than talking. That's so critical. All of us love to hear ourselves talk. I don't exclude myself in that group. But what's important in financial planning, what's important in investment management is really listening to the needs of the client. What are their objectives? What are they trying to achieve? And I think if we listen and we put together a good, comprehensive, long-term plan that meets those objectives, then we're doing our job as financial advisors and we're serving our client. And that's critically important. So it's important that we listen and that we, based on those needs and those objectives, that we formulate a plan that will stand the test of time and will stand up and down cyclical markets. So important.
No, that's awesome. That's awesome. Perfect. Thank you for clarifying that. Actually, I'm going to jump over to Cynthia Trujillo real quick. So Cynthia, I need you to come off mute. And so we've had, and I want to talk about this, about planning and support. So this is really critical no matter what our situation is. The government, they've had various loan programs. They've provided businesses with help through stimulus, through grants, through loans. Has this created obstacles in accounting or business, or what are you guys offering as part of services for our clients so that they're aware of what they need to do with accounting?
Well, I think the pandemic in general has created a shift in accounting practices across the board. The PPP and the EIDL, without a doubt, were a light at the end of the tunnel. If people could pay their rent, if they could pay their employees, if you could pay your utilities, I can make it. So the government rushed these plans out with very little insight, with very little guidance. So people didn't know what was going on, but I need the money, give me the money, and we'll figure it out later.
Right. Just do it. Shoot first, ask questions later.
Yes, always. And the first question my clients asked me when applying for the PPP was, how do I get it forgiven? Well, you haven't gotten it yet. How are you going to get it forgiven if you don't have the loan yet? And now as guidance has started to come out, and there's back and forth in Congress. Is it going to be forgiven? Is there a blanket forgiveness? How much am I getting, or what do I need to provide? The bankers all the time, what do I need to give you? The bankers tell you, I'm not sure, the SBA hasn't told me. So across the board, we've been telling clients, well, keep the pay stub, keep your leases, keep the copies of your rent checks. If you take the PPP loan and it's forgiven and you've paid the rent and you paid your employees, now those expenses as of now have become non-deductible. So now we have to treat them as non-deductible expenses. We have, the biggest issue here are the uncertainties. They're creating more pressure on accounting and record keeping practices because you don't know what you're gonna need.
I think you're spot on, because we don't know everything that we need just yet. As a matter of fact, we're still going back through our forgiveness preparation, and customers are anxious because they want to make sure that they're doing what they need to do.
Right.
But like, shoot first, ask questions later, we'll figure this out. But there's one component from a CPA perspective that's critical, and it's this deferral of payroll taxes. I mean, I know Trump, when there was an impasse, also signed extensions of things. Can you talk to what does that mean exactly, this deferral and payroll tax components? Just give a highlight of what that is, please.
Well, right now it's new. It's the president has declared a deferral of payroll taxes for wages paid from September 1st to December 31st. So it's very important to note that this deferral does not mean that it's going to be forgiven. You don't submit the payment now, it doesn't mean that at the end in January, when you submit your 941, you don't have to submit these payroll taxes. So a lot of professionals are going back and saying, it's better to call this a loan. You're not giving me the money now, but you're going to have to give it to me later, than calling it so much a deferral. Because most people think of deferral, well, maybe I don't have to pay it. The payment, again, we're going back to, it's very uncertain. There's a lot of questions that need to be answered before the program starts on September 1st. Is it just the employees are not going to submit the payroll taxes and they have to file their 1040 and Uncle Sam says, hey, I'm your favorite uncle, pay me a check because you didn't pay me later, you didn't pay me before, pay me now? Or is it more like the treasurer is going to come back and say, you know what, this is more bookkeeping hassle than it's worth. It's very minimal change. Let's just call it even. Don't pay me. We don't know. And that goes back to the uncertainty, creating more pressure on accountants and bookkeeping practices.
Sure. Just put in a payable column. You'll figure it out later on, and then you can reconcile it to where it winds up on equity. By the way, Cynthia is a graduate of Florida State University, where she has a Bachelor of Science and a Master's in Accounting from FIU. So you're both a Seminole and a Panther. So I think you clear yourself through here. I didn't do the introductions because I know Manny had, as a sponsor, took the introduction, and thank you for that very much. I'm also going to switch over now real quick to Samira Feliz. Samira, it's great to have you here. Works at the Federal Reserve Bank of Atlanta. She's the Director of Engagement and Community Economic Development Department. And over your course of your career, you worked with economic development issues on local, federal, international levels. And by the way, let's just put it out there, because it's just a Florida thing with the universities. But don't worry, Samira, they're not going to say a word after I share your graduate pedigree here. She is a graduate of Harvard College and Yale Law. So just drop your mic. I will tell you that our chairman of the board, who is off, who has his baby picture up, his daughter just graduated from Harvard undergrad, actually. So she's a beautiful, fantastic girl. It's great to have you here. Samira, representing the Federal Reserve, you guys have a lot of programs and you've been instrumental during this part. Can you share with us how the federal government has been supporting small businesses specifically, who is the primary audience that we have here, during this pandemic?
Yeah, sure. What I'd love to talk about is to help you get familiar with a really, really new program that the Federal Reserve is standing up right now, called the Main Street Lending Program. It's very different from PPP, which was just discussed, because this is a loan program. It's designed to help credit flow to small and medium-sized businesses and even to nonprofits if they were in really strong financial shape before the COVID crisis, but need loans of some kind to help them stay afloat or recover or adapt to the effects of the pandemic. So as I said, it's not a grant program the way the Paycheck Protection Program was. It was really designed for companies that were probably too big to receive those PPP loans, but also too small to access like the stock markets and other sort of complex capital markets that are out there that some of the earlier presenters talked about. So what happens here is the Federal Reserve, we don't ever actually issue direct loans to small businesses, but we're supporting lenders' ability to make loans to small businesses. And I'll walk you through some of the terms and conditions of this product in case your audience thinks they might be eligible for it. But if Lily, if you could share, there's a website you can go to, which is www.bostonfed.org/MSLP. And that's where you can get a lot more information on the program. So generally, if you're a company that was established before March 13th of this year, you have less than 15,000 employees and less than $5 billion in revenue in 2019, those are some of the baseline requirements. The loan you could qualify for, we have 3 different loans. One is called the New Loan Facility, another is called the Priority Loan Facility, another is called the Expanded Loan Facility. I know that's a lot of information, but each of them have slightly different terms. All of them have 5-year terms on the loan. They don't require any principal payment for 2 years and no interest payment for a year. And the interest rates are LIBOR, they're off of LIBOR. It's like 1 or 3 month LIBOR plus 300 basis points or 3%. The key difference you're gonna find between the 3 products is the minimum and maximum loan size, really the maximum loan size, and then how leveraged you can be expected to be in the program. So the New Loan Facility has a minimum loan size of $250,000 and a maximum of $35 million. And your total debt as a borrower can't be more than 4 times your 2019, what's called EBITDA, right? Interest, taxes, earnings before interest, tax, depreciation, and amortization. For the Priority Loan Program, those are for slightly larger loans. You can get a maximum loan of $50 million for that, and your debt can be 6 times over your 2019 EBITDA. And then the Expanded Loan, that one allows lenders to give more credit to an existing borrower. Those 2 previous programs were about new loans. This one is just gonna give you more loan and an existing, more funds from an existing loan you might have, as long as that loan had been originated on or before April 24th. And there are a few other features there. The minimum loan size for that expanded facility, though, is $10 million, and the maximum is $300 million. Again, there's going to be a restriction on how leveraged you can be as a firm to get that. It's 6 times EBITDA at that time. We also have a product out there for nonprofits, and I'm just going to mention that in case any of your members are on boards of nonprofits that might qualify, but it's the same idea. Similar terms in terms of 5-year loans, interest payments deferred for a year, principal payments deferred for 2 years. The interest rate range is the same, the amortization schedule is the same, but how you qualify is slightly different. You have to have operated since 2015 or earlier. You have to have at least 10 employees, but no more than 15,000. Your revenues have to be under $5 billion, and your endowment has to be below $3 billion. And then there are restrictions on how your revenue, non-donation revenue, has to be 60% or more of your expenses for the 2-year period, 2017 to 2019. Once again, you have a new and expanded loan facility, but all those details you can get from that website that was sent around. So I wanted to at least provide you some sense of the new kind of credit options that might be out there for your members. customers.
No, thank you, Samira. By the way, I did resend on the Q&A. You will see the panel, the Boston Fed link, as well as I answered in the Q&A as well. Somebody had asked to resend it. It's in the chat box and it's in the Q&A box under the answers provided. So thank you very much. And we need to resend Al Molini's contact information. It only went to the panelists. So it needs to go to everyone. Lily, you selected the panelists only on that contact info, please. So what I do want to share also is that the Main Street Lending Program, Samira, it's fair to say the amortization period is up to how long?
The amortization schedule, I don't have in front of me right now. I'm sorry. It's a 5 year, I believe.
Okay, because I think that that's one thing people have to, groups and businesses have to understand. Amortization periods are going to determine payments. It's like everything. If I borrow $100,000, I have to pay it back in 5 years. It's going to calculate a payment as such. If I have to pay it back in 20 years, it's going to stretch your payment out a little bit more. So you need to look at those different options. And banks are also representing, similar to a PPP, on the Main Street lending accessibility through the Fed. So
that's a really important point I'd underscore. This is not a program where you're applying directly to the Federal Reserve for the funds. You need to find a lender who is issuing these loans, just like you had to find a lender who is helping you access PPP. But once again, if you go to that website, that Boston Fed website, lenders who have registered for the program have the option to say they are accepting new customers and that they want to also be listed on a public website for accepting new customers. So you can find on the list of lenders who have signed up for the program who opted into being publicly announced on that website that I sent around. And your lender may set under other criteria in addition to what the Fed has established. So you're going to have to go through a standard or some form of underwriting process that the bank has established itself to actually access one of these loans.
No, excellent. Thank you. Thank you so much for that. And yes, very important. So I'm not sure if there's anything else that you wanted to add, Samira, but I know that thank you for everything that our government has been doing to help us through this time, because it's been critically important to our success. I have one more person that I want to highlight here, and I have I'm hoping that he's going to be able to share a lot of great insights with all of you, but I wanted to give you guys a chance again to go ahead and share any other additional comments.
Let me offer just one more point I missed is that the program closes as of now on December 31st, 2020. So you should try to apply for it before then, or else as of now at least, that's when it's expiring.
Good, perfect. Yeah, thank you very much for that, and thank you for participating with us today here. I lost your camera already. There you are, you're back. By the way, we were going to do this, íbamos a hacerlo completamente en español, pero como estaba participando hoy, no sabía si hablaba español. I'm just messing with you, but we actually do our seminars in English, but on occasion, some of our Univision followers, and I see that Jason Mizrachi from Univision is on the line, we do have to translate for some of our folks, or some people do it on their own, because we are the Hispanic Chamber, but it is great to have you here, and thank you so much for participating with us. Juan del Busto. Señor. If you all don't know Juan del Busto, let me see if I can read. I have this whole huge bio up here.
No.
Oh, no,
Do not read that.
Yeah. You worked hard. Juan ran the Federal Reserve of Atlanta for the Miami branch for years. He was a man, and by the way, he gives back. He's awesome. And if you ever want a travel consultant to travel the world, Juan has traveled extensively. He is a great resource. You tell him, hey, I'd like to go to the Falkland Islands, and he's going to tell you all about Las Malvinas. So I'm just telling you, he's
great penguin.
Penguin, there it is. You see, there's something from his travels. Not to mention, he's a huge supporter of United Way, and he's involved in so many things. And still, even after his retirement, has stayed involved. He is true Miami treasure. Juan, look, there's no question here. Can you please talk to us? What's going on? What are we going to go through? How are we going to get out of this? Tell us just, on the economics of this, anything that you want to share, sir. The floor is yours.
Thank you so much. Let me just start off by saying about the Main Street program. One change that happened July 17th on the program, the Federal Reserve modified the program to include nonprofit organizations, such as educational institutions, hospitals, and social service organizations. So that's one more area that people can apply for the Main Street loans. Now, it's not a very, very easy program to understand. Just the question and answer document for Main Street is 74 pages. So it's a typical government program. 74 pages just on questions and answers. But let's get into the economy. And some of my colleagues that spoke on the first part were great, and I want to chime in and add some of the things to what they said. I always have to give a disclaimer that these are my comments and it's only mine, and do not represent any of the views of Ocean Bank, Morrison Brown of Varghese, or any other organizations that I'm a consultant with. I also do not want you to interpret my political comments towards one political party. I try to be neutral to our political environment. However, I will not hide my frustration of each of the actions and the processes that is taking place in our country. One of the things, for example, why I think both parties are incompetent in certain ways. Once they approved the last CARES Act, they knew that we're going to do another one. Why didn't they meet and start working on it as soon as?
Zoom knows you're getting passionate and it's starting to cut you off. Is it me? Because I've lost internet twice today. No? I want, and look at the face. Pobrecito. Uh-oh. Juan, you all can hear me, correct? So it's Juan, unfortunately, his connection. And was it me, or he was about to really get on a soapbox on that one, right? Oh my God, I think we just lost him. Don't go anywhere. We've been up to 38 participants. We dropped down to a few more. We'll wait for him to come back. But in the interim, I see that our chairman is back. Roland, by the way, you know how handsome I think you are anyway, because of the crush that I have on you. But in addition to that, your baby picture was adorable, by the way. I love the fact that you have that on your thing. But while we wait for Juan to hopefully get back on, just wanted to turn over to you, sir. Any other comments or additional things that you wanted to share with our audience? As our chair, I'm the past chair, so I no longer am important. You're on mute. You're on mute, Roland. Oh, no.
Sorry. Listen, I got to tell you, I just think, first of all, it's nice to see Manny. Before we had Manny, we just had his picture of Manny, but now he looks fantastic. I don't know that I have anything more to add. I mean, I got to tell you, I just think the information that's been provided has been rock solid. I end up reading quite a bit of stuff. I think we all do. But it's, the conversations with very specific questions, and everyone's been answering them. I think it's been really important, like I said. And of course, there's the local nature of what we're discussing, right? Because, it's just like politics, everything is local and business is local. And we know a lot of the stuff that Lily's been doing. It just seems certain industries like the restaurants have been decimated. And I just think, I find that to be so tragic for so many families. But anyway. And by the way, I feel like I have the hardest job in America because I have to follow Felipe Basuto as chairman of the South Florida Hispanic Chamber of Commerce. I mean, I should have waited for somebody else and then taken the mantle. That would have been smarter.
That's not true. You're going to be bigger and better. You're definitely more handsome. So,
And I haven't pushed him yet. Lo estoy llevando suavecito. Right?
Yeah, no.
I'm not.
Despacito, Roland.
I text and I write to Roland.
Yeah.
Right, Roland, 8 p.m., 9 p.m., we got to do this, Roland. I'm intense. Am I intense, Roland?
He knows.
Is Lily intense?
Yeah.
I don't know exactly how to answer that the right way. Let me just say, Let me just say affirm. Yes, yes. Yeah, that's all. I'm going to leave it at that. Yes.
We're going to leave it at that.
I already texted Juan, so let's see. I don't know what happened.
Yeah, but really, we're at our time, and I mean, I would have definitely extended some time, and I wanted Juan to
speak
insights because I think he was spot on. Look, I think we speak for everybody around just the back and forth between all the political parties, all the look, the government's done fantastic things. The SBA, the Federal Reserve, what they've come to, but I think it's some of the things that the unknown that Cynthia was talking about. I mean, we still don't know how to forgive your loan just yet at the banks, but we're working on that. There's a lot of different things out there, and you want to criticize the gift horse because at the end of the day, that's what it was. From our government, but when Donna Shalala was with us, she really put it very, very elegantly. She goes, "You guys have paid taxes for years. We're just giving you your money back to continue your business." I thought it was extremely well put, and she's definitely a great representative for our area down here. But Manny, anything else that you want to add, sir? Because I'm gonna wrap up the call. I feel bad for Juan, but anything else you want to add?
No, thank you. Thank you for allowing us to participate again. And Roland, congratulations on taking on the mantle. I know that you have big shoes to fill, but you're an incredible attorney and you have an amazing reputation in town, so I'm sure you're going to do an awesome job. And Lily, just a shout out to you, all the work that you're doing, especially in support of the industries that need so much help right now. Yesterday with the blood drive, we all saw that piece as well, which was fantastic in the city of Doral. So everything that you're doing, congratulations. Somebody described you recently in the media article I read as a force of nature, and I think that's actually very, very accurate. So congrats on all the things you do.
Let me unmute her. I don't think Lily knows that she's muted actually. So Lily, you're unmuted. She took back the host. Lily, you have to unmute your line. Sorry. There you go.
Okay. I was thanking Manny and Ocean Bank always, but wait, Juan called me. He wants to come back. So at least just to say. Well, we started at 3. We're supposed to end at 4:15.
It was till 4.
4:15. It was 4:15.
No, I haven't.
So we started at 3. It was 4:15. Yes, it wasn't half an hour each. It was 45 minutes each.
No,
he's back. He's back. He's coming back, right?
Yeah.
Guys, I have to apologize because I got to log out because I have a.
It was only till 4, Lily. That's the time we have it blocked off. But I'm going to let him come off. I myself will have to drop off because I have another appointment to get to, another webinar for work. But I'm gonna wait for Juan on there. Rolly, if you need to drop off, no problem. Good seeing you, by the way. It's been
very much. Thank you. And I want to thank Cynthia, Samira, Manny, as always. We really appreciate the time you take to educate our membership, the constituents, and the public at large. Thank you very much. I look forward to one day actually looking into each other's eyes. I mean, God forbid.
That's forbidden.
Anyway, thank you very much.
Yeah.
Felipe, I'm gonna have to drop as well myself.
Samira, thank you so much. Please promise you'll come back to us.
I hope so. And we're here. We're a public service, right? Like we are a public purpose entity. We are here to support you. We like being able to do events like this. So feel free to contact us again. As this crisis is asking unprecedented things of all of us, and just know that we take our job really seriously about both monitoring the economy down here in the Southeast, but also providing research and information and data that's going to be useful. So please feel free to be in touch with us.
No, as a matter of fact, yeah, we'll talk. I'll reach out to you with Lily. There are some things that we'd love to have you come back in here. When I saw what you did for the Federal Reserve, I thought it would be critical to have you here. And thank you for being so articulate and clear today. Appreciate it. But I know we need you to come back. So
Bye-bye.
Bye-bye. Thank you so much. Perfect. Lily, you're on mute. If you're talking to us or you're speaking or out loud or passionately, you're on mute. Cynthia, by the way, thank you. Hi to Louis Bue on behalf. I didn't share that you were with Colbert Bue and I forget the last person. an associate. So thank you so much. I don't know if you need to stay on because we're waiting for Juan to come back. Well, some
I
of
have
us.
another meeting I have to get to, but it's been a pleasure. Thank you so much for having me here.
Thank you, Cynthia. It was
Thank
nice
you.
talking to you in the weekend.
And again,
Say hi to Louis. I pushed Louis to bring you
you
in.
know, best to our
I will
Louis.
definitely let
Louis
Louis
le
know.
caía arriba.
Yeah, no, best to Louis, our board member. So he's such a great friend. Perfect.
Wonderful. Thank you.
Cynthia. Lily, so
Yeah, I think Juan probably just can't. I don't know what happened to Juan.
I don't know.
I spoke to him, I know. Qué pena, because he was so,
If you can come off your, I don't know if you're.
we're gonna have to bring Juan again because he was so prepared.
No, and Lily, I think we can. And look, I think we can throw in another webinar. I know we were trying to now to only keep them to 2 a month, but you know, I want to hear from Juan. I think everybody
Juan
should.
prepared since 5:30 in the morning on Saturday, he called me.
Oh
He
my
called me
God.
like about 9 in the morning. No,
Saturday? Oh, okay.
no, he won't do that. He called me at 9 a.m. He said, Lily,
I
I've been
only
waiting.
sleep a lot, but 5:30 on a Saturday, that's not going to go.
Sí, ese es él, yo, sí, claro. Juan is an early bird. Yeah, of course. Yeah, so he called me. We need to have him again. Yeah, he's calling me. Wait, let me put him on speaker, better.
Lily, I have to
Juan.
drop off. Yeah.
It says forbidden. I can't log
Well,
in.
they're saying goodbye to you.
Lily, the webinar was only till 4. The time has already expired. Lily,
Yes, okay, bye. Thank you, everyone.
Thank
See
you.
you next
We will
time.
be out there.
Thank you,
Manny,
Bye.
thank you, Al and Jorge. Thank you all very much.
Thank you, everyone. All
Thanks.
participants. Bye-bye.